Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jesowshek, CPA.
Hello and welcome back to another episode. Today's episode is what do I need to know about real estate losses? Now, again, this is just one podcast episode in an entire guide and series that we're doing on real estate. So if you want to check out what we've talked about already, and as well as follow along for future episodes, you can find all of them organized nicely at taxsavingspodcast.com/real estate. So definitely check that out. Now, again, today, what we're going to be talking about specifically is discussing real estate losses. And the first question we want to ask is, why do rental properties often produce a loss? And so if you've been listening for the past couple of weeks, we talked about how depreciation works in real estate. So if you haven't checked that out, do so now. But essentially, because of depreciation, oftentimes rental properties will have a positive cash flow, meaning money in your pocket, but will be showing a loss on paper because of the high depreciation that you can take early on in the property's life. You also have regular operating expenses over and above depreciation, which will add into this and help create that loss. So losses from real estate are considered passive losses. Now, we did an entire blog post and podcast episode on passive income and how that works. So I definitely recommend you check that out there. We'll have a link in the show note. So let's talk about how are passive losses handled. And the biggest downfall to passive activity is this idea of passive activity losses. So passive losses can only offset other passive income. You cannot use a passive loss to offset earned income, capital gains, or portfolio income. So essentially, if you have a rental property, which is passive, and you have a loss in it due to high depreciation, you can only offset that loss against other passive income, which would be other rental activity or businesses that you do not actively participate in. But you cannot use that loss to offset earned income like W-2 income or capital gains. Now, here's the good thing, though. If you have passive losses that you do not have enough passive income to offset, they are not gone forever. Unused passive losses, aka also known as suspended losses, can be carried forward to future years when you may have additional passive income in future years, or when maybe you sell a rental property for a gain. So even though you may not be able to use your passive losses right away, rest easy knowing that you'll be able to carry it forward to offset future income until it has been fully utilized. Also remember that you are probably having a positive cash flow now without having to pay taxes on it. So that's great news as well. But let's talk about, how can I utilize those passive losses? Let's say you have a lot of passive losses, but not as much passive income to offset them against, and you want to use that. So how can you utilize those? So although passive losses can only offset other passive income, there are some strategies that we work with real estate investors on to fully maximize these losses. And we're going to talk about 3 of them specifically right now. The first one is becoming an active real estate investor. Now, if you're under certain income limits, you can claim up to $25,000 in rental real estate losses from the property if you actively participate in managing it. And we're actually be talking about this further in next week's episode. So again, becoming an active real estate investor allows you to claim up to $25,000 in rental real estate losses if you actively participate in managing it. And that's, again, if you're under certain income limits. We're going to be diving deeper into that in a future episode. Item number 2 is becoming a real estate professional. And qualifying as a real estate professional allows you to fully deduct passive losses against your ordinary income. So this can be super powerful. And there are various requirements that need to be met to become a real estate professional. Again, this is one we're going to be talking about next week as we talk about further on that item. Item number 3, though, is to generate more passive income. So if you're a business owner, is there part of your business that you do not actively participate in? Maybe we could split some of that off into a separate passive entity that could create some income that you could use your losses against. Or do you have another property that you could sell at a gain and then use those losses against that to reduce that gain that you might have. Do you have any highly appreciated assets you could sell at a gain to use the losses against? There's also, could you invest in a high cash flow passive activity that the losses can be used to offset? So, when we look at past losses, at the end of the day, we know that at some point you will be able to utilize your passive losses. It just depends on when. In a perfect world, we would be able to utilize them right away and offset any other types of income we have. But in order to do that, there may be some adjusting and planning that we need to do using some of the strategies that we mentioned above. We're going to be diving deeper into some of those strategies in future episodes where we drill deeper into that. Again, if you have not checked out our website, we're doing a bunch of full series and digging deeper into real estate taxes, how they work, how beneficial real estate can be in growing your wealth. So you can check out our website where we're going to have future episodes as well as our past episodes on. That's taxsavingspodcast.com/real estate. Also, within our tax minimization program, we're taking what we discuss here, not only on this episode, but all of our episodes for business owners, real estate professionals, everything, and diving so much deeper into it. As part of our tax minimization program, we have a library of tax strategies, implementation guides, videos, downloads, and so much more. We have a bonus where you have Ask a Pro, where you have unlimited access to our team to ask general tax and accounting questions. It's kind of like having an accountant in your back pocket. We do monthly group trainings, a private Facebook group. We also have a partner directory if you're looking for some add-on services, things like that. Our tax minimization program is a great solution for those small business owners or those looking to find ways to pay the least amount in taxes as legally possible. So if you haven't checked it out yet, go to taxsavingspodcast.com/tax. But again, just kind of a roundup of what we talked about today. This question of why do rental properties often produce a loss? It's because of that depreciation that we've talked about in a previous episode. With depreciation, rental properties oftentimes have positive cash flow, meaning that you're making income. There's money in your pocket, but depreciation on paper is making that rental property show a loss. And so when we talk about passive losses, rental properties are considered passive income, and passive losses can only offset other passive income. So you cannot use a passive loss to offset earned income, capital gains, or portfolio income. So when we look at passive losses, we got to make sure that we're only offsetting other passive income. Now, the good thing is that unused passive losses, which are also known as suspended losses, can be carried forward to future years when you may have other passive income or when you may sell a rental property for a gain. So even though you're not able to use your passive loss right away today, just know that you'll be able to carry it forward and offset future income until it's been fully utilized. And also that we talked about is the great thing about passive losses and that heavy loss up front is that you're still showing income. You're still making money now and not having to pay taxes on it because you have that depreciation bringing it down. Now, when we look at, let's say you have a lot of passive losses. You have a rental property that created we did a cost segregation study, and now we have a bunch of losses in year one, and we want to be able to offset other income that we have. There are a few strategies that we utilize for that. One is becoming an active real estate investor. We're going to be talking about that more next week. Another one is becoming a real estate professional. We're going to be talking more about that next week. But the other way is to just generate simply more passive income. So if you're a business owner, can we separate parts of your business that maybe you don't actively participate in to a passive entity and create income that way? Or do you have another rental property that you have that maybe you could sell for a gain? We can use some of those losses that we have this year to offset that. We could invest in a high cash flow passive activity that we can use some of those losses to offset. So there's definitely options out there to kind of move some of that income into passive or create more passive income to help offset our losses. But again, at the end of the day, just know that at some point you're going to be able to use your passive losses. It just depends on when. And again, in a perfect world, we would utilize them right away today to offset any other types of income we have. But again, in order to be able to do that, there may need to be some adjusting, some planning that needs to be done. Again, we're going to be continuing this discussion on real estate taxes and how it can often be so much different than, say, business owner taxes. So we're going to be continuing this discussion. If you're interested in learning more and seeing future episodes and past episodes, go to taxsavingspodcast.com/real estate. That's where we're going to house everything that's specific to real estate. And again, we dive into this and so much more in our tax minimization program. So if you have not checked that out yet, go to taxsavingspodcast.com/tax. Thanks again for listening to another episode. I cannot wait to expand on this real estate taxes topic next week. Again, I will see you all next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.